Hello there, many thanks for staying with us on TVC News at 1. It's now time to bring you the latest from the business desk. We started with the currency market as Nigeria's external reserves hit a 7-month low after falling to $38.57 billion as of the 25th of this month. Well, that's according to the latest report from the Central Bank of Nigeria. Now, the report also shows that the reserves, which have been fluctuating for weeks now, experienced its lowest of $39.01 billion and $38.39 billion on October the 10th and 8th of last year, respectively. The continuous decline in the nation's external reserves used to defend the naira value is making the banks tighten access to foreign exchange to travelers and other legitimate users as scarcity bites harder. Due to the scarcity, many banks are extending the waiting period to access forex for foreign trips, thereby denying travelers with urgent trips access to apply for personal travel allowance or business travel allowance requests. Despite the interventions by the CBN to ensure the stability of the local currency, the naira has continued to depreciate, closing last week at 610 naira per dollar. At the parallel market, a decline of about 0.7%, while at the official investors and exporters window, the naira fell by 0.1%. to hit 419 naira and 50 kobo per dollar. And now in this next report, the Lagos Industrial Customs Command is giving companies not yet registered for payment of excise duty under its command 14 days to comply or face sanctions. The directive was issued during a stakeholders meeting in Lagos, and TVC News correspondent Ifeanyi Eze has the details.
The essence of the meeting between the Lagos Industrial Command of the Nigeria Customs Service and manufacturers under the excise control is for both groups to deliberate on issues of government trade policies and excise duty payments. The Comptroller, Queen Ogudu, sees it as an opportunity to forge synergy and collaboration with key industry players.
Soft drinks, 10 naira per litre. For 2022, for the beer and stout, 40 naira per litre. For wines, 20% duty and 50 naira per litre. They haven't given you people 90 days to prepare for all this. It's expected by now you would have all done that, so that would effect from 1st of June. Will kickstart the new fiscal policy.
Speaking on the new federal government's fiscal policy on carbonated and sweetened drinks, which have been brought under excise control, Comptroller Ogudu warns that enforcement action will be taken against companies evading excise duty payment.
We are going to go all out for them, and by the time we get them, we will seal up the premises and make them to face the law, the wrath of the law.
Responding to the new excise policies, some of the industry operators expressed their concern.
It's a federal government policy, and we follow up. But so far, we are packaged very gradually. We come up to where we can stand firmly and start payment. But the area you are not allowed to, there are so many rivers to cross or bridges to cross. It should be by volume. Whatever you produce, you pay.
Industries are not really going to find it very easy because most industries are actually closing down. Cost of gas, cost of diesel, cost of manufacturing is actually on the high side. Most industry are restructuring, downsizing and all of that. So it's going to really put a lot of challenges on industry. And we can only wait and see how it pans out.
It was noted that factories with excise factory number will be required to also apply for a revised entry of premises. Ifeanyi Eze, TVC News, Lagos.
And now shifting focus to the equities market, investors in Nigerian equities closed the weekend with net capital gains of 598 billion naira despite the onset of considerable profit taking. Investors sought to monetize substantial capital gains built up over weeks of successive rally. The gains by large cap telecommunication stocks rallied the overall market position to a positive closing. Benchmark indices at the Nigerian exchange at the weekend indicated average return of 2.09%, equivalent of net capital gains of about 598 billion naira. The rally nudged the average year-to-date return to 26.61%. Now, the All-Share Index, the value-based common index that tracks share prices of all quoted equities, the NGX, closed the weekend at 54,085.3 basis points as against its week's opening index of 52,979.96 basis points, while aggregate market value of all quoted equities increased from its week's opening value of 28.56 trillion naira to close at 29.16 trillion naira. And now on the international front, Asian stocks traded Wall Street higher today, while the dollar was pinned near 5-week lows as investors wagered on an eventual slowdown in U.S. monetary tightening, though after sharp hikes in June and the month of July. The Memorial Day holiday in the United States made only a limited impression on the month-end demand, and MSCI's Broadest Index of Asia-Pacific shares outside Japan climbed 1.9% to a 3-week high. Japan's Nikkei added 2.2% and South Korea's Kospi rose 1.2%, and China's blue chips also firmed up 0.7%. Nasdaq futures also added another 1.1% after gaining a 6.8% just last week, while S&P 500 futures firmed 0.6%, having rallied 6.6% last week in the best week so far for this year. Euro Stock 50 futures gained 0.6% and London's FTSE futures also climbed 0.2%. In Australia now, market regulator today says it has commenced civil penalty proceedings against Australia and New Zealand banking group for allegedly misleading its customers over their credit card accounts. According to the Australian Securities and Investment Commission, about 165,750 ANZ clients were charged cash advance fees and interest for withdrawing or transferring money from their credit card accounts between May 2016 and November 2018 based on incorrect account balances. The Australian Securities and Investment Commission, that's ASIC, says that in some cases single customers were charged thousands of dollars in fees, although the lender has remediated over 10 million Australian dollars to customers who were affected up until the 17th of November 2018. The regulator still insists it is seeking orders from the court to remediate customers who have been wrongly charged since the year 2018. And looking at some highlight from the Russia-Ukraine crisis, the Russian Central Bank in its latest move today says it will restrict trading in some foreign shares that are traded on the SPB exchange, the country's second largest bourse, citing the need to protect investors' rights and interests. The central bank said the decision applies to foreign stocks that have been blocked by international clearing houses except for shares of foreign companies that carry out production and economic activities, mostly in Russia. The bank did not disclose the list of shares it is restricting trading in. And in a related development, the European Union failed on Sunday to agree on an embargo of Russian oil, but diplomats say they will still try to make some progress ahead of today and tomorrow's summit on an exemption for pipeline deliveries to landlocked Central European countries. The proposed sanction on oil imports is part of the European Union's 6th sanction package on Russia over its invasion of Ukraine. The package includes cutting Russia's biggest bank, Sberbank, off the SWIFT messaging system, banning Russian broadcasters from the EU, and also adding more people to a list of individuals whose assets are frozen and who cannot enter the EU. The whole package has been held up by Hungary, which says an oil embargo would be a body blow to its economy because it cannot easily get oil from elsewhere. Slovakia and Czech Republic have expressed similar concerns as well. To break the deadlock, the European Commission proposed that the ban apply only to Russian oil brought into the EU by tankers leaving Hungary, Slovakia and Czech to continue to receive their Russian oil via the Russian Druzhba pipeline for some time until alternative supplies can be arranged. And wrapping up business news now, oil prices on the international market climbed today, hitting their highest in days, more than 2 months now, as traders wait to see if the European Union would reach an agreement on banning Russian oil imports to sanction Moscow for its invasion of Ukraine. US West Texas Intermediate crude recorded a price increase of 0.8% to hit $116 per barrel, and Brent crude now sells at $120.10 per barrel, registering an upward price margin of 0.54%. Bonner Light's performance is also starting the week in the green territory with a price surge of 0.36% at $121.40 per barrel. And for the OPEC basket, crude oil dealers offer $116.50 per barrel, recording an uptick of 1.34%. Well, that's it from the business desk. Many thanks for watching so far. We have sports news coming up shortly. Just stay tuned to TVC News. Good afternoon.